The cryptocurrency market is buzzing with activity today, June 19, 2025, as participants digest significant developments on both the legislative and economic fronts. The overall market sentiment remains cautiously optimistic, with the crypto fear and greed index hovering around 70, indicating a, greedy mood among investors. This optimism is largely fueled by a major step forward in U.S. regulation. The U.S. Senate has passed the Guiding and Establishing National Innovation for U.S. Stablecoins, or GENIUS Act. This is the first piece of major federal crypto legislation to clear a chamber of Congress, marking a pivotal moment for the entire digital asset industry and signaling a new era of engagement from lawmakers. The GENIUS Act specifically targets U.S. dollar-pegged stablecoins, creating a federal framework for their issuance and operation. The bill mandates that all stablecoin issuers must maintain full one-to-one reserves to back their tokens, ensuring that for every digital dollar in circulation, there is a real dollar held in reserve. This requirement is designed to prevent the kind of bank runs and collapses that have shaken the industry in the past. Furthermore, the legislation requires issuers to undergo monthly audits and comply with strict anti-money laundering protocols, placing them under the direct oversight of the U.S. Treasury Department. These rules aim to build trust and stability in a foundational component of the crypto ecosystem. This legislative milestone is not just about crypto, it represents a significant bridge to the world of traditional finance. By establishing clear, federally backed rules, the GENIUS Act is expected to give large financial institutions the confidence they need to engage more deeply with stablecoins. Projections suggest the U.S. stablecoin market could expand dramatically, potentially growing eightfold to over $2 trillion in the coming years. Rumors are already circulating that major corporations like Amazon and Walmart are exploring the possibility of issuing their own stablecoins, which could really revolutionize payments and e-commerce. The bill's passage is a clear signal that digital dollars are on a path to becoming a legitimate and integrated part of the mainstream financial system. The bill's journey is not yet complete, as it must now be reconciled with a similar version in the House of Representatives before it can become law. However, with strong bipartisan support and a push from the White House to finalize the legislation before the August recess, momentum is clearly on its side. This move toward regulatory clarity in the United States is seen as a crucial step in fostering innovation while protecting consumers. The successful implementation of the GENIUS Act could serve as a model for other nations and pave the way for more comprehensive crypto regulations in the future, ultimately legitimizing the asset class on a global scale. While the GENIUS Act has provided a dose of long-term optimism, the market's short-term focus is squarely on the Federal Reserve. Today, the Federal Open Market Committee, or FOMC, concluded its meeting and announced its latest decision on interest rates. As widely anticipated by analysts and traders, the central bank opted to hold rates steady for now. This decision was largely priced into the market, so the immediate reaction was, honestly, pretty muted. However, the real story for investors lies not in the decision itself, but in the guidance provided for the months ahead. All eyes and ears are now on Fed Chair Jerome Powell's subsequent press conference for clues about the future. Investors across all markets from stocks to crypto are intensely focused on the possibility of interest rate cuts later this year. The central question is whether the Fed sees enough progress in curbing inflation to begin easing its monetary policy in the third quarter of 2025. Lower interest rates generally make riskier assets, like cryptocurrencies, more attractive to investors because the returns on safer assets like government bonds become less appealing. Any hint from Chair Powell that a rate cut is on the horizon could inject a significant wave of liquidity and positive sentiment into the crypto market, potentially triggering a new rally across the board for digital assets. The language used by the Fed chair during these press conferences is scrutinized down to every word. Traders listen for subtle shifts in tone or changes in economic projections that could signal a change in the central bank's thinking. A more dovish stance, which suggests a greater willingness to cut rates to support economic growth, would likely be met with enthusiasm from the market. Conversely, a hawkish tone, emphasizing the ongoing fight against inflation and the need to keep rates higher for longer, could dampen investor spirits and lead to a downturn in prices. This is why the press conference often causes more market volatility than the rate decision itself. This dynamic places the crypto market in a state of heightened anticipation. The current summer lull, characterized by lower trading volumes and volatility, could be abruptly interrupted by the Fed's commentary. A clear signal for future rate cuts could be the catalyst that breaks the market out of its current range and pushes prices toward new highs. On the other hand, if the Fed signals continued caution, it could reinforce the current sideways price action or even trigger a deeper correction. For now, the market holds its breath, waiting for Jerome Powell to provide the clarity that will shape trading strategies for the remainder of the summer. Turning to the market leaders, Bitcoin and Ethereum are presenting a mixed but fascinating technical picture. The total global crypto market capitalization stands at approximately $3.38 trillion, having seen a slight dip of around 1.91% in the last 24 hours. Bitcoin is currently trading in a tight range between $104,600 and $105,000. While it has managed to hold above the critical $105,000 support level for periods, the overall momentum appears to be slightly bearish in the medium term. The asset recently broke below the floor of a rising trend channel, a technical pattern that often suggests a potential for further decline in the coming weeks. A closer look at Bitcoin's chart reveals some concerning signals for traders. The breakdown through the support level at $106,000 is a key development, as this level had previously acted as a strong foundation for price. This breach, combined with a negative volume balance, meaning more selling pressure than buying pressure, suggests that bears may be gaining control. Furthermore, a negative divergence on the relative strength index, where price makes a new high but the indicator does not, often precedes a downward price reaction. In the short term, Bitcoin is approaching another support level around $102,400. A strong bounce from this level could signal a bullish reversal, but a definitive break below it would be a clear negative signal. In contrast to Bitcoin's hesitant price action, Ethereum is showing signs of strength. The second largest cryptocurrency is trading between $2,514 and $2,606, marking an increase of over 2% on global exchanges. This positive movement is being supported by a noticeable increase in activity from large holders, often referred to as whales. When these major players begin accumulating an asset, it is often interpreted as a sign of confidence in its future price appreciation. This divergence, where Ethereum gains while Bitcoin consolidates or dips, is a trend worth watching, as it could indicate a shift in capital flows within the crypto ecosystem. This technical landscape suggests that traders are at a critical juncture. For Bitcoin, the battle between holding short-term support and succumbing to medium-term bearish pressure is the central theme. A decisive move in either direction is likely to set the tone for the broader market. For Ethereum, the challenge is to maintain its upward momentum and break through key resistance levels to confirm a new bullish trend. The coming days will be crucial in determining whether the market will see a summer rally led by Ethereum or a broader correction led by a weakening Bitcoin. Beyond the two giants of the crypto world, the altcoin market is presenting a diverse landscape of opportunities and developments. One of the standout performers has been Bitcoin Cash, which is currently in a strong medium to long-term rising trend. The asset recently confirmed a bullish inverse head and shoulders formation, a classic technical pattern that often signals a significant price reversal to the upside. This occurred when Bitcoin Cash broke above the key resistance level at $466. Based on the size of this pattern, technical analysts are projecting a potential rise towards $739 or even higher, a move that would represent a substantial gain from its current price. The decentralized finance sector has also been a source of strength in the market over the past 3 months. While the broader market has been consolidating, leading DeFi tokens such as AAV and Uni have posted notable gains, reflecting growing confidence in their underlying protocols and utility. On the industry side, major exchanges continue to expand their offerings. Coinbase, for example, recently listed the Spark token and has announced plans to launch perpetual futures markets for both Spark and Resolve. The exchange is also pushing the boundaries of innovation by seeking approval from the SEC to offer tokenized equities, which would represent shares of traditional stocks on the blockchain. Progress is also being made at the state level, complementing the federal push for regulation. In Ohio, the House of Representatives has approved the Bitcoin Rights Bill, HB 116, which now advances to the state Senate. This bill is designed to establish a clear legal framework that protects the rights of individuals and businesses to use, mine, and custody Bitcoin within the state. Such state-level initiatives are crucial for fostering a crypto-friendly environment from the ground up, providing legal certainty that can attract innovation and investment long before comprehensive federal laws are fully implemented. In summary, the crypto market is at a dynamic and pivotal moment. The passage of the Genius Act in the Senate has laid the groundwork for greater institutional adoption, while the entire market awaits guidance from the Federal Reserve. Bitcoin's price action remains uncertain, but Ethereum and select altcoins like Bitcoin Cash are showing promising signs of strength. As the industry continues to mature with new product offerings from exchanges like Coinbase and supportive legislation from states like Ohio, the ecosystem is steadily building a more robust foundation. As always, the market remains volatile and unpredictable, and it is essential for participants to stay informed and conduct their own research.